Recently, my stock portfolio has hit over $150,000, and today I want to go through the entire account. If you're somebody that wants to build a $100,000 portfolio, then there's a few core concepts that I know will help you, and I'm going to talk about those also in today's video. I'm going to show you every stock that I own, where I've made money, where I've lost money, and talk about my mindset and strategy that has really helped me grow the portfolio over the last roughly 6.5 years. If you're new here, welcome. My name's Sheldon. I make completely transparent videos talking about my investment accounts and my investment journey. Drop a like on the video if you get any value out of it, and subscribe to the channel so we can go on this journey and build our portfolios together. All that being said, let's dive right into it, and this is my account. I currently have about $158,000 invested. This is made up of 3 separate accounts. In Canada, you have a tax-free savings, a registered retirement savings account, and a first home savings account. So I have 3 separate investment accounts that all have some type of tax advantage, and that is what this $158,000 is made up of. In terms of investment allocation, it's about, I think I have like 42% in ETFs, 55% in stocks, and then whatever's left over is just kind of sitting in cash in the account. So I have contributed up until this point, I've contributed around $82,500. That is my personal contributions into the account. And in total across everything, I'm sitting on about $75,600 of unrealized gains, or about 91% total rate of return. And one thing that I think is just interesting to look at quickly is the total profit and loss. Guys, it took me years to get to any point where I was like actually making money in the market, right? And it took a long time for the portfolio to get to a point where it really started rolling. I was a couple years in and I was still in the red. But in the last couple years, that's where a lot of the hard work and, the long-term mindset has paid off. And now we're up, we were up around $84,000 at one point in the account. There's been a little bit of a pullback in the market, which we'll talk about. But I think that's just an interesting graph to look at, because if you're early on in your journey, do not give up, do not pull your money. And eventually, this is where your account is going to end up. So this is the first account that I want to go through and talk about. It's the big account. It's my tax-free savings account. There's about $124,000 invested. In total, in this specific account, I'm up around 120%. Since I started it. I have roughly $56,500 invested. I don't know why I keep saying like roughly and about it. I have $56,500 contributed into the account. And this is where all of my stocks are. I basically have my tax-free savings, which has all my stocks. I have a registered retirement account, which has 1 ETF, and then a first home savings account, which has, 1 stock and 2 ETFs in it. I'll show you those 2 accounts after, but really the main focus is this one. This is where all my stocks are, and that's where, let's just dive into it, because that's where, this is where the real money is made, and this is the fun account. So obviously I have VOO. If you've watched the channel in the past, you know that I think having a core holding of the S&P 500 is a good idea to reduce risk, and kind of allows you to, it allows you to ride out the volatile times in the market a little bit easier. And I have chosen to go with VOO. I have roughly 40 shares of VOO at an average price of $492. And the current symbol price is $684. So I have about almost a 40% rate of return. That's roughly $7,500. And the reason that I chose VOO, like really you can choose any S&P 500, broad index, ETF that you want. It doesn't really matter. I went with VOO because it's a Vanguard fund. Vanguard is a massive name in the ETF industry. And the expense ratio is very low, like 0.03% management expense ratio, and an ETF is one of the lowest ones I could find. So, I mean, the price per share is a little bit high if you're like just getting started, but I've been in this ETF for a long time and have kind of rode it as it's grown. So that's just kind of the reason that I picked VOO. Really, like I said, it doesn't matter too much, but I do think it's good to have that core holding. But now for the individual stocks, this is the fun part of the account. This is what as individual investors, this is the part that is actually exciting. So AMD it's currently a 16% of this entire account, which is a very big position for me for one single individual stock. I have 30 shares, an average price of $124. The current symbol price is $477. And I'm up around just over almost, let's call it $10,500 or $10,600 in the account since I've been in it. I love AMD as, a stock and a semiconductor stock. I at one point had NVIDIA shares and a moment of silence because I did end up selling those after I think I maybe doubled my money in it. But if I would have held on to it, it would have been like 1,000+% gain. So a moment of silence for that. But I did manage to get into AMD at a solid cost basis. And this is a stock that I'm going to hold for a while. In the last, I think I started buying AMD in the back half of 2024. And then since then, obviously, it's gone insane. In the last 3 months, it's been very volatile. And there's been a lot of pullbacks from all-time highs. But guys, I mean, if a stock runs 165% in a year, I think it's fair to expect some volatility and some pullbacks from those highs, right? Like, just relax if you own AMD. And you're seeing these big pullback days where it's down 8%, it's down 5%, because then you have the bounce backs where it's, up a lot. And you can see in the last 3 months, it's been very, very volatile. So they have earnings coming up in August. We'll see what happens with the numbers and the projections, and if they come in with, a massive beat and a lot of people up their price target for AMD again, then the stock's going to continue to move, right? And, who knows what happens, though. Like, it could continue to pull back. It could float around 40, 450, $500 as a stock for the next year or so, because it has had such a good run. Ultimately, I hold it, and I want to continue holding it because it's a quality stock in a very in-demand industry. We need the products, the hardware, chips, and the foundational hardware layer for AI that AMD is building, because that's where a lot of the money from the big tech companies is flowing into AMD. So I am going to continue to hold it. It's obviously I'm a tech stock investor first. Like that, if you look at my portfolio, it's tech heavy. And even though AMD has run up into a big position in the account, I'm going to continue to hold it, and let it run, let it pull back a little bit, ride out the volatile time that it's kind of going through in the market. But for the foundational business model, like, nothing's changed with AMD. So until that happens, I will not sell the stock. And it's going to be one of the core holdings in my account. Google, I love Google. Google is probably one of the best companies of all time, if not the best company of all time. And having that as the number 2 position in the account, I think, is something that I'm very comfortable with. I'm up, I have 19 shares at $114 average price. It's a $354 stock now. So, I mean, the rate of return is over 200%, which is just phenomenal. If you can get over 200% in a stock, you are laughing. And luckily in this account, I've had a couple that have gone over 200. I think 3 stocks in total. But we'll talk about the other ones. Google is, it's pulled back a little bit from its highs. It hit about 400. I think it was the high of $404 a share. And again, man, just chill out. You know, we're going through times where people are freaking out because, first of all, there's geopolitical events going on that's, you know, showing up as, and the market's shaky because of that. There's also memory prices of purchasing the hardware memory that's gone up, which has affected Meta stock and a couple other, you know, big tech companies. And really, can they see the ROI for the amount of money they're investing into AI? Like, we'll see, right? And that some of those fears have seeped into Google, but Google is such a solid company. Like, the net income is $244 billion on a $445 billion trailing 12-month revenue with like a $20 EPS. You know, even the price to earnings, like the valuation is not stretched on Google by any means, in my personal opinion, right? In terms of AMD, right, like you could argue that this is getting a bit stretched for evaluation, even though it's a bit more of a high growth, higher hyped company. So you can expect to see higher price to earnings ratios and valuation multiples, but Google is just chilling, man. Like, they got a 16 price to earnings ratio, and they're a $4 trillion company. Like, Google is laughing. Any pullback in the stock is honestly, in my opinion, a buying opportunity if you're in it for the long term. And I would add more Google into my account, even though it's the biggest one. It's like, other than AMD, because AMD's run so much, Google's like the second biggest position in my account, right? Other than VOO, second biggest individual stock. I would buy more Google, man. Google is Mr. Goog. Like, it's just such a good company. YouTube's going nowhere. It's digital advertising's going nowhere. They have hardware bets. They're investing in data centers. They're investing in AI. They're investing in quantum computing. It's going to be a big company 10 years from now. So that's why I hold Google. It's also like a little bit of a different play than AMD, right? Like, it's like AMD's more that foundational AI hardware layer. Google is the other things that I just mentioned. Costco is, you know, a bit of a stability play in the account. It's pretty much done nothing since I've bought it. Like, I have 7 shares at like a 933 or 39 average price, and it's down, or it's down to like 951, or it's up to 951, sorry. So it hasn't really moved since I've bought it, but dude, every time you go to Costco, it's fucking packed, right? So, I mean, that's part of my overall strategy when it comes to like how I design my portfolio, how I pick the stocks that I have in it, is like, just out in your everyday life, like what's busy? What has, you know, what do you believe in to be a company that's going to sustain itself over the next 5, 10, 15, 20 years? And I just cannot fault, or I can't bet against Costco because it's just always busy and there's so many people there and you spend so much money when you go, that even though it's not like, I have no expectation of Costco being like a very high growth play. Like I expect higher returns out of AMD than Costco, but I'm comfortable holding Costco in the account because it's a bit defensive. It reduces my risk and exposure to just technology. And that's why I like to have it as another big position. Caterpillar has gone absolutely fucking insane. 142% on Caterpillar, up $3,300. I have 7 shares at a $335 cost basis. It's over an $800 stock now. It has pulled back. I think it hit a high of like over 1,000 a share. Yeah, like 1,073 a share. And I'm not going to go too in depth on the financials of these stocks in this video. I'm keeping it relatively high level as to like what I own, why I own it, and talk about the overall strategy, because that's ultimately what matters. Like, I could dive further into the financials, and I have other videos going into that, and we'll make more in the future, but not this video. And the reason that, part of the reason I own Caterpillar, right? Like, first of all, you think about the AI boom. Caterpillar is going to be the one that is on the foundation, the foundational layer actually moving the dirt so these companies can come in and build the data centers, right? That's one. Also try and like take out Caterpillar in the industry. Like they're so ingrained into like heavy duty equipment that replacing them is just not going to happen. There's also a financial branch to Caterpillar that's gone that is a part of their company, and these AI tailwinds has fueled Caterpillar because they're now getting tasked to build a lot of these sites, right, and all of these data centers. So, I mean, on top of that, like, man, they just have such a moat in the industry, and it's a defensive play. When I look at my portfolio strategy, it's not a pure technology play, but it's something that benefits from the AI boom, but it's not specifically an AI company. And again, like, it's a tech heavy portfolio, so I'm trying to reduce my risk to that by adding in some other types of companies. Meta is pretty much a pure technology play again. They haven't done too much in the last year, right? Like it's actually down 20%. For the long term, I still love Meta. And like, if you were buying back in 2022, man, you are laughing right now. I think I've bought shares of Meta at a lot of different prices. But ultimately, I've held the stock for like, I think around 5 years, since it was like one of the first stocks I've ever bought. And my average price is what, like $2.98. It's a $550 stock today. So, it's almost like 85%. That's almost another double. I think in the future it will be. It recently had a pretty big, like, it's just been kind of struggling lately. I think the fears of how much they're investing and how much they're actually, like, the ROI they're getting from that investment, that's played a factor in the pullback. The price of memory has played a factor in that. But ultimately, Meta prints money. Like, look at the margins on Meta. It's honestly stupid. Gross margin of 81%, profit margin of 30% on like a $1.5 trillion company, like 1.4 trillion. Like that's just insane. Their top line revenue. What is their top line revenue now? 228 billion for trailing 12 months. Like, it's just insane. And like something stupid like 90 or 80, 90, even +% of that is like purely from digital advertising, because they have the audience, right? They have the apps that they're still growing their user base of that. But then they're just sell advertising to that audience. And it just prints cash flow is Meta, right? Like it's an amazing technology play, and they're also investing in AI and data centers and hardware, and things like that. And I think they're going to continue to be in a position to take advantage of the future technology and come out as a winner in a lot of that. So I'm comfortable having that as one of the bigger stocks, or not even as one of the bigger ones, but as something in my portfolio, right? CRM is a bit of a different one, where it's like a pure SaaS play. If agentic AI really blows up, which, like, let's be honest, everything is moving in that direction, especially in the corporate world and in the AI chatbot and, like, you know, just this AI world that we live in. Like, everything is becoming more hyper personalized with AI, and that at the corporate level, Salesforce is able to provide that as a service, and they're already ingrained into a lot of companies, so they just have to layer AI into their new products, and they are going to be the leader in that, in my personal opinion. It's also like, it hasn't done anything yet because it's a relatively new position for me, right? Like, it hasn't moved at all. But it's actually a really, really big bet for me. Like, it's a smaller position at the moment, but I have like a roughly $5,000 principal investment invested into Salesforce. That's way bigger than I had in AMD. That's bigger than I had in Google. So it's a pretty big bet. I think I expect it to do well. I don't know if it's not gonna be like a 10x, 1000x 1,000% return. But over the next 4 or 5 years, as we see AI play out in the B2B SaaS world, Salesforce is going to be a winner, at least in my opinion, and that's why I have it. So it takes a little bit of a different approach, and I try to expose myself to like different aspects of the economy and the business world. So hopefully you can kind of piece together my thinking when it comes to like diversifying this portfolio, right? Apple is, I don't know, Apple had such a horrible day today. Like what? Oh no, poor Apple. I think I read an article this morning where it was like the worst day since COVID. Apple had the worst trading day since COVID. And to be honest, I haven't dug too deep into it. There's a lot of haters against Apple in the stock market world. I think it's just, for me, I love the stock because I love their products. I use their products. I'm going to buy an iPhone after this iPhone is no longer working. I have 2 MacBooks, AirPods, an Apple Watch. Like, it goes back to like my Costco example, right? Where like I just kind of look at my everyday life. I'm like, what am I using? What products do I believe in? And obviously, like I like Apple products, and it's proven to be a good stock. Like, I know like it's had a crazy, like in the last 5 years, 111% return, right? Today, look at this. Oh my God, it fell off an absolute cliff from 330 down to like 300. Poor Apple, man. I think they never get there's not enough hype in it. It's too big of a company. I think it was like by market cap the biggest company in the world recently, again, like as it always kind of is. I don't think I would sell my shares. I'm not like chomping at the bit to buy more Apple, but it's just a solid core holding that I think is going to continue to grow at a solid rate. I don't think it's going to outpace even the market. I think it'll probably be roughly in line with the market, maybe a slight beat over the next 5-10 years. But it's just it's the best technology company in the world, in my opinion, right? In terms of hardware products. JP Morgan, I like to have, exposure into the financial world. Other than this, I don't really have exposure into any type of finance company other than within VOO. I'm sure there's, exposure there, but JP Morgan, it's just a solid big bank, and I wanted to have some exposure into that financial world for the purposes of diversifying. MDA is a space technology company. They build space electronics. This company has gone on an absolute fucking tear. It's pulled back a lot, actually, but it's still up like 178%. I have 94 shares at $15. It's a $42 stock today. It's a smaller position though, like it's a 3% position. Of course, I wish I bought more, as always, but I like to have exposure into the space world because that's just cool tech. I didn't buy the SpaceX IPO. Maybe once the valuation comes a bit more down to reality with SpaceX, I would buy that and hold it for the long term, but I knew it was going to pop off the IPO and then kind of just, I don't even know where it's at now, but I knew it started going down, and it was a bit of a falling knife, that stock, for a little while. I don't know if it's bottomed. I haven't paid too much attention to it, but I do believe in the company, right? And that's kind of a topic for a whole other video, but I like to have exposure into the industry. Palantir, this is the one that really changed the whole game for me in terms of this portfolio, and it brought me to that next level financially. I had 200 shares originally of Palantir at $8 a share. It rose up all the way to like $200 a share. And then I kind of sold all the way up, and now it's pulled back a little bit, and I think honestly it's just going to be a bit of a dead stock. I still like the exposure to it, but I'm not going to buy any more Palantir shares. I'm not going to sell these shares. I'm just going to hold them. It went on an absolute tear in the portfolio, and just like kind of AMD is now, how it grew into like a way bigger position. This used to be Palantir. So maybe I'll start shaving AMD a little bit and and cycling that money back into like other positions, but that's Palantir. I've made tons of videos on Palantir in the past, and kind of diving into the use case of the product and technology, but it's a lower bet for me now. Nike is, I don't even know what to say about Nike anymore. I'm trying not to let go of hope, but I think I'm at a point where there's almost no hope left with this one. I'm down, roughly $1,700. It's like less than a 2% holding in the account. I still love Nike products. It's why I bought it. I have lots of Nike products. I'm a pretty big runner. I like to run. I love their shoes. I love their fitness equipment and their apparel and clothes and everything. I don't know. Do I see a better opportunity for this money? Probably, and it's something I might do in the future. Unfortunately, like with this portfolio, because it's a tax sheltered account, right? Like I can't actually contribute any more money into it for like this year. Or I think I'm like almost maxed. I might be able to put like $500 more in. But that's the account. That's how I'm thinking about it. Those are the positions that I have. That's where I've made money. That's where I've lost money. And a little bit of my mindset and strategy when it comes to designing my tax-free savings here. To quickly show you how the other two accounts, like this is my RRSP. I have $12,000 in it. It's up 100%, which is pretty good because all I've invested in is VOO. This is the most boring account ever. Really, the reason that I contribute to it is because it has tax benefits of it's tax deductions that you can either pay less tax or even get money back. So that's a little tip to any of my Canadian friends out there, is if you contribute into an RSP, you might get some more money back at tax time. But that's it for that account. The next one is my first home savings account. This has $22,000 in it. It's up a whopping 10%. Absolutely massive returns in this one. But it's a very safe account. Like I'm not aggressively investing in this one at all because it's money obviously for a house. I don't want to lose that. I'd rather place my bets in my other account and just have this as something pretty boring. But I just have VFV, which is the Canadian VOO. I got a little bit of Burke, a little bit of Warren Buffett action going on, and then VIOG, which is just a slightly more aggressive ETF than a VFV, to add just a little bit of spice, a little bit of action into the account. But I just kind of want this to match the market, essentially. I'm not focusing on this account like I focus on the other one. So that is my 3 separate accounts and everything that I have invested in the market. Hopefully that was interesting for you guys to see, like, first of all, what I have invested, when I was able to add those stocks into my account, where I've made money, where I've lost it, and, hear about my mindset when it comes to the growth strategy and defensiveness of those investments, because I will be the last person to tell you that, you can get rich quick by YOLOing it into this cryptocurrency or this fucking day trading play. Like that's just not my mindset. It's not how I invest. I buy quality companies and hold them for the long term, and that is how I know that you can get to this position as well, or maybe way beyond it. A few of the core, like the last thing I want to kind of talk about is like the core concepts that I think you need to have locked in if you want to build $100,000 portfolio, $100,000 plus, $500 million portfolio. And that it actually starts before you even invest a cent, right? Like the core aspect of it is like focusing on your income and making as much money monthly that you possibly can, and then keeping your expenses as low as you possibly can, and then shoveling the difference into your investment accounts. And the way that you can do that is, increase your skill set, get a higher paying job, live below your means. Like, obviously you have to live your life, and I think it's good to spend some money sometimes. Like, I went to Spain this year. I was in Vegas for work, and I went and drove a Lamborghini and a Ferrari on a track, which was fucking sick and worth every cent of that. I also bought a motorbike. So it's like, you still have to spend some money and enjoy your life, but ultimately the more you want to grow your portfolio, the more money that you have to contribute into those accounts. There's no way around it, right? So focusing on that, focusing on your income and sort of your budget, personal finances is like the first step to all of this, and having that locked in. And then once you get into actually investing, picking the right accounts that give you some type of tax advantage is like step number one. And then diversifying with your holdings, and making sure that you're not, YOLOing everything into some high growth, high hyped up stock. Like, buy quality companies that are going to be defensive, and understanding that, you have to be able to handle the volatility for the level of risk that you're exposed to. And then be patient. This is a game that takes time. I've been in it for around 6.5 years of building these accounts and building this portfolio. And it just takes time. You gotta ride out the volatility. Do not pull your money when it gets volatile. Stick in the market, stick it out. And eventually, you're going to be glad you did. Like 5-6 years ago, that's when I was like trying to position myself to know that in 5 and 6 years, I'll have $100,000 portfolio. Right now in the next 5-6 years, I'm trying to position myself to have a $500 million portfolio. And it's all about that mindset and the long-term thinking. You're not going to get rich quick in this game. And if the more you try and get rich quick, the faster you're going to go broke. It's just how it is. Unless you get lucky, unless you get, you buy into something and you 100x your money. And if that happens, I'm happy for you, right? Like, that, all the power to you. But the reality is that's going to be pretty hard to do, and then to replicate after that. So yeah, that's my mindset. That's my strategy. That's my investment accounts. That's everything that I own, and kind of how I got to this point that I'm at now. So thank you so much for watching. I know I'm probably the most inconsistent person in the world when it comes to posting YouTube videos, but I'm focused on making a higher monthly income. I work in B2B tech sales, and that's how I've been able to grow these accounts. So yeah, subscribe to the channel if any of that information was useful. Drop a like on the video. It really helps me, grow the channel. Ultimately, I'm trying to build a community here of like-minded people that are trying to build wealth, trying to grow their portfolio and learn about the market. And that is everything that we talk about here. So if it's interesting to you, subscribe to the channel. Thank you so much for watching. If you're still here, you're an absolute legend. Thank you so much. Peace.